Hello, everyone. Welcome to another edition of Get Social with Bond Finance. My name is Sarah Wilkins from Through the Door Property, and I'm here today with Dylan Kirk, who is a fabulous broker at Bond Finance. Hi, Dylan.
Hi Sarah, how are you?
Good. How are you?
Yes, not too bad. Very hot in London.
Absolutely stifling at the moment, isn't it?
It is.
So interesting topic today, bridge to let.
Yes, Bridgelet. So it's quite a new set of products at the moment. They've been going for a year, maybe 2 years. We've had more lenders come into the market. Some doing it well, some doing it not so well. But yeah, it's kind of a really great alternative to the standard bridging kind of process that we've got going on at the moment.
Brill, brill.
So, I'll just get started then. So I'll give you a quick introduction. So to us here at Bond, we'll go through the traditional bridging process just so we can see the difference between how we'd normally do it compared to the new bridge to let process. And then we've got a few lenders that are doing it at the moment, just to give you a quick rundown on what their kind of policy is and stuff like that.
Okay.
So Bond Finance, as said, was established in 2004. We are an FCA regulated firm, a founding member of the NACFB, and all of our brokers are CMAP qualified. And if your broker does not have them accreditations, find one that does. We have two departments. We have our residential and buy-to-let department, which do exactly that, residential and buy-to-let mortgages, along with our commercial department, which does everything else from commercial development to bridging.
Cool.
So here's the team. I think we're actually blocking one out, but that's fine. Here's the team. We're a medium-sized firm. Our office is based just up the road from the Bank of England. So, bridging products. So as I said, traditional bridging products process, the purchase, it sounds simple when I say it like this, but you purchase property on a bridge, you'd complete the works, you'd then submit an application for a buy-to-let exit, but some lenders do require you to take 6 months from owning the property to actually then exit onto a buy-to-let.
Yeah.
So that's going to increase holding costs, I think is the biggest issue there. And then even with that second application, you're going to do a second valuation, probably with a different valuer. So they may not necessarily agree with what the original valuer kind of came up with their GDV. And after all of that, you're still going to have to go through a legal process, as you will be switching from one lender to another.
Mm-hmm.
And then if we compare that to the bridge to let products, so we're going to submit the bridge application and buy-to-let application at the same time with the same lender. We'd carry out the initial valuation, supply the schedule of works, and then the valuer is going to give you a post-works GDV. You then complete on the purchase, the bridge, and then carry out the works. And then with the second valuation, you're going to have the same valuer. And what's kind of the advantage of that is from the first valuation, you've already had that line in the sand. So as long as the works are, done up to standard and done correctly, then you are more likely, and you should feel more confident that the valuation that you wanted is the valuation that you're going to get.
That you're going to get, yeah.
Yeah. And then ultimately you're just going to complete with the buy-to-let remortgage. It's going to be a lot quicker because you're doing all of it with the same lender. And as I've put at the bottom, it's a great way and a great option for the BRR strategy. How many R's there are in that?
How many hours there?
Because it's the bridging process. It's much the same, but this just makes the entire kind of strategy a lot more streamlined and a lot more kind of direct. So if we move on, so we've got kind of two lenders that are doing the lighter stuff at the moment. So Precise and Paragon, so both quite limited in the refurbishment that they would allow. So, painting, new flooring, that sort of stuff, but just nothing that requires building control sign off. So we're not moving bathrooms or kitchens or anything like that.
Okay.
And then They will allow you to convert a property up to a 6-bed HMO. Again, we're not knocking down walls. It's more just about converting what you already have. So they do work really well with the undervalued purchases, auctions as well, especially auctions that don't necessarily need a lot of work, but you get that advantage of it being a quick process for the bridge, but then being able to do a smaller amount of work, so actually then exit onto the buy-to-let. With these two lenders in particular, you do require to own a property already, whether that's your own residential or a buy-to-let. And then in terms of minimum loan amounts, so Precise at 40,000, Paragon £30,000. So it would be great for properties kind of up north as well.
Yeah.
The loan amounts are kind of
They
low.
are low, aren't they? Yeah, which is great.
Which actually, if we move on to Lend Invest, so they're a lot more flexible. So they'll allow a lot more works to be done. So, stuff that does require the building control sign off, if you're going to put in a new kitchen or move this, move that, they're okay with that. So a lot more flexible. And again, they're going to allow you to convert property up to a 6-bed HMO. And actually, one of the good things about them is they do go up to 85% LTV on the purchase, just providing there's enough uplift on the GDV.
Oh, that's good.
So that's a little bit more kind of property specific. So, it's not going to work for everyone, but it will hopefully work for some.
Yeah.
And then, the other thing is they don't require you to have any property experience. So you can be a first-time buyer, first-time landlord with no properties in the background.
Sure.
With that, they are a little bit more expensive. Obviously, I've not got the rates on here, but they are slightly more expensive, just because they do allow quite a lot more work as well.
Yeah.
And then with their minimum loan, they are at £75,000. So it is that much more than the other two.
As you're paying for the.
Sorry?
So you're paying extra for the flexibility, aren't you?
Exactly that, yeah. So, there are other lenders that are coming into the market doing this, but I think there's some teething problems here and there, but we'll get there in the end. But it's quite exciting that there are more lenders coming into the market. Hopefully they'll push each other, more competition, more flexibility, I think is kind of how we want to go forward.
Yeah, yeah.
And that is everything. Just a quick rundown. But like all bridging, it's all kind of case by case. So if there's any questions, if everyone has a case, then obviously happy to have a chat about it. There is still a place for bridging lending, kind of more traditionally, but this is more just about streamlining that process. When you've not got a lot to do, or you just want to get it done quickly and have that exit in hand at the end.
Dylan, thank you so much. Fantastic presentation and interesting information. Thanks for your time, and we'll see you in the next episode.
Yes, thank you very much, Sarah.